I want to get to our Wrap the Week segment. I did want to start with a poll. As you probably know from watching the show, we like to recap the polls that we have running on our StockCharts TV website. That's stockcharts.com/TV. Also on Twitter and on our YouTube channel, we'll put some surveys out. And again, as much as you can answer those polls, just also helps us to have a good dialogue about what we're all seeing. Question was, in your opinion, what's the probability of the S&P 500 finishing the year above the 3,600 level? 49% of you said an over 70% chance that we finish the year above 3,600. 38% of you said within 50 to 70%, and then below 30%, 13% of you. So interesting to see that, 87%, my quick math says, is over a 50% chance that we're all thinking it's gonna close higher. And again, we're not far from that. It's actually right where we're at right now. It's right at that 3,600 level. I wrote that question about a month ago when we were sort of chopping around, and it wasn't, who knows, depending on when we ask it, the answers could certainly be different. But most of us, it seems like, have a strong, higher than average probability that the S&P is going to finish above 3,600. So that's an interesting one, just to think about that upside potential. And again, what's interesting is that's only about 6 weeks away from now. What's funny is a lot can happen between now and then. I mean, in some ways we're in the fourth quarter. There's half of the fourth quarter left, which means a lot could happen one way or the other. I don't see that as unreasonable. I do feel like there has to be, and most likely to be, some backing and filling, as you can probably tell from the conversations we've been having. And I think my conversation with Craig Johnson yesterday was probably the most vivid about potential for downside, although with some other guests, we've certainly done that as well. But you have to respect the trends, and the trends so far have been pretty positive. Let's get to our Wrap the Week segment, which is where we're going to start with our weekly wrap chart, which is here. We're going to refresh this just going into the close, and basically this is how the week played out for all of us. We're going to look at today's trading in just a moment, but the S&P finished up about 2.25% from last Friday's close. Obviously, a big bulk of that was the gap up into Monday. Now, earlier in the day, Monday, we were much higher, sort of closed, still up a bit, but really today is what pushed us to the highs for the week. What outperformed stocks this week? Bitcoin was up over 4%. These flipped a little bit, so sorry for the labels, but crude oil and small cap stocks both up right around 6%, maybe a little bit above that. So the two winners are really small cap stocks and crude oil. It's interesting, we've seen energy as the number one sector for many of the days this week, including today, if I remember right. We'll look at that in a second. And small cap stocks. We talked about the relative performance of small caps, especially small cap value, which out of the 9 style boxes, probably one you've thought about the least for a while, because it's been, small caps have been underperforming and value's been underperforming. All of a sudden that's completely flipped. And this week you saw, from last week, sort of an emergence of these value-oriented sectors and value-oriented stocks that are starting to perform pretty well. What underperformed the S&P this week? Emerging markets were up 0.8%. The U.S. dollar up 0.6%. EM is an interesting theme, and we've talked about some of the charts that have emerged a bit. We're going to look. We talked yesterday about the U.S. versus global stocks, which has rotated back lower, really on a weaker dollar environment. Overall positive for the week, but the trend has certainly been negative for a little while. Even further down, bonds were down 0.8% as yields are moving higher. The NASDAQ down 1.25%. This is that FANG trade, or the FANMAG trade, as we've talked about, which is sort of given off a lot of its gains. And while they've had some impressive days, they up a little bit. Still nowhere near some of the more value-oriented sectors. The worst out of our little asset allocation universe here is gold, though, which is down almost 3.3%. And that chart of the GLD is an interesting one. It's certainly shown short-term weakness, and even though the long-term trend could certainly be quite positive, the short-term tactical signal has absolutely been weakness over strength, and suggesting further downside until we'd find some sort of stabilization there. So this week, certainly following through more to the downside. Let's look very quickly today, see if there are any specific themes we want to tease out. As I mentioned, the S&P finished up today at 3585. The small cap index up even more, 2.6%. So again, we continue to see the small cap leadership theme. The VIX is now back around 23. 10-year yields higher a little bit as bonds came off a little bit. And we looked at that chart yesterday with Craig Johnson, looking at 10-year yields breaking above the trend line. If you look at the last couple years in the 10-year yield. So higher yields are certainly a possibility. And today and this week, we're seeing some of that. Gold a little higher today, but overall the week has been relatively negative. Energy, the number one sector, up 3.7%, led the 11 S&P sectors, followed by real estate, industrials, materials. So on a day when the S&P does this, I am used to seeing tech and communication services and consumer discretionary at the top of the list, as I'm sure we all are. Very different look here with energy. The XLE really bouncing off of relatively low levels, a big gap up on Monday, and just continuing to hang in there. So I think with things like energy, with financials, things that have gapped up, you certainly want to pay attention to the recent upswing, take the lower end of those gaps, see if those sectors are able to remain above support. When I think of the XLE, let's look at that here very quickly. When I'm thinking of energy, I'm so used to, to talking about how weak energy has been, because again, up until this week, it's certainly just continued this pattern of lower highs and lower lows. But I think one of the benefits of charts is identifying when the picture changes. And certainly this week with the gap higher, chopping around, but remaining, really closing at the upper end of this range, it certainly speaks to some short-term upside momentum, the relative strength improving this week for sure. And my question, of course, would be, going into next week and beyond, do you continue to see some improvement? I drew this trend line off of the January peak that lines up with the June peak, and, breaking above that, I think would be compelling. Breaking above the 200-day moving average for the first time since, January would be impressive as well. That would certainly continue and complete a follow through. But in the short-term time frame, you have a higher high, a higher low. And at this point, I have to assume that short-term trend is certainly going to be higher until proven otherwise. The way you determine whether it's proven otherwise, I'm taking the lows from this week just above 32. I think that's a reasonable point, that if it breaks that, you have to just start to reevaluate and see if there's staying power to this upswing. But overall, I'm impressed with what I've seen with energy being able to hold in after the gap up this week. Financials are another one, the XLF. Then we're going to get to the Mindful Investor Live chart list. What's interesting on this chart, and I didn't put the line on here, but I'll do it really quickly. If you take this right here, this is the high from June. I think one of the concerns with things like financials and a lot of the bank stocks, for example, they hadn't really eclipsed their June high. And this is as the S&P eclipsed that, a while ago, and has continued higher. On the XLF, you had not, and now you actually saw it. So just like with the XLE, I think you take the lows of this week, which on the XLF chart, on the financial chart, actually lines up really well with the market peak in June, or the XLF peak in June, which was where the market peaked as well. I think holding above 2650 is a really good indication going into next week, if that's able to do it. I certainly see further upside in both financials and energy, and some of those other cyclicals like industrials, materials, and so forth. So, it's certainly been a leadership rotation story. I think the gap up this week, started it. I think seeing, there could have been a very quick mean reversion with these coming back down, and they haven't. They've actually held up okay. And I think seeing if they're able to hold those gains into next week, as we have a chance to sort of digest this week and what's going on, I think that'll be absolutely key. Let's finish off talking about the Mindful Investor Live chart list. We're going to start with the weekly model. This is our market trend model based on weekly data and using a series of exponential moving averages. I haven't changed this label yet, but certainly as of the close today, the medium-term model going back positive. It turned negative a couple weeks ago, and again, sort of that short-term sell-off. It's reverted back to the upside, a new closing high for this week, and that is totally fair. That the long-term, medium-term, short-term models are all going to be positive. So as a trend follower, I have to think the trend is positive, the trends are working, stocks are breaking out. That's what you're going to want to stick with until proven otherwise. And if you think about my order of operations, it starts with price, goes to breadth, goes to sentiment. The concerns I'm seeing are, as you go down that list, is where it gets more concerning. So price is fine. It's where sentiment, it's the extreme bullishness and sentiment that is getting me, is making my ears burn just a little bit on this uptrend. But again, I will follow the price number one, absolutely. Having said that, a nice finish to this week. This is after Thursday's session where we're trading off a little bit, and it felt like we could show some weakness going into the weekend. We've rallied it a little bit, and so finished really, sort of in the midway point of Monday's range, still below 3,600, which is noteworthy because this green shaded area is the area of resistance we've been talking about really since the September peak. Retested it in October. We've retested it once again. I would not declare this to be over yet. I don't think we've seen enough of a follow through to declare that the market is establishing further new highs. You are seeing it in certain places, absolutely. So I highlighted the Value Line Arithmetic Index. My friend Ryan Dietrich at LPL Financial had published a great chart on social media, focusing on that is absolutely right. Value line geometric index is broken to a new swing high. And so the S&P, sort of the main benchmark we use, is the one that has not. So interesting to see if we get that follow through going into next week. And again, for me, I'm thinking of all the different headwinds and tailwinds. At the end of the day, let's follow the price. Breadth indicators sort of flipped. Today is going to be interesting. These aren't updated for today's close just yet, but given the strength that you saw from small caps, I wouldn't be surprised if these breadth measures turned higher. One of the things we talked about is how the large cap and mid cap breadth lines broke to new swing highs, really above their August high. The others had not, right? So the common stock only advanced decline line, the small cap advanced decline line did, but it was a bit of a head fake as we rotated back down yesterday. Given the strength I'm seeing today, we'll have to see, in a little while whether we confirm a breakout there. But we could have a situation where all of these have confirmed the break to new highs, which tells you the breadth picture overall is pretty strong. I don't have the bullish percent index in here, but it's back above 70%, probably 75+%. I want to say, which is overall in bullish territory, similar to previous bull cycles. New highs are an interesting one. You saw an huge number of new highs. It was increasing pretty steadily, and then we had about 30% of the S&P making a new high on Monday. That's on the gap higher. Since then, it's fizzled dramatically, and that's obviously because many stocks gapped higher, and really, very few have followed through and been able to eclipse those gains. When I think about, I always talk about confirmation. You want a breakout, and then you want confirmation. I would say the new highs list increasing would be one bullet point on the confirmation list for me, which tells me that enough stocks are starting to able to eclipse those swing highs from Monday. At this point, Monday looks sort of like a blow off, super euphoric, last gasp higher. And then we close down at the lows of the day. I think that sentiment in my brain has subsided a little bit given the strength we see going into the weekend, which is finishing on a fairly strong note. But I think, again, eclipsing those Monday highs would be pretty key. And I think that's something we're going to have to look for going into next week. And I think the increase or a continued upside in the market would have to be matched by an increasing new highs as well. 82% of the S&P as of Thursday's close trading above their 200-day moving average. That overall speaks to the strength in the markets. For me, again, when I think about concerns about euphoria, that is also pretty similar to what most market tops look like, where you have about 80% of the index going up. Sometimes it's been a shallower pullback, like you saw here in 2017. Other times, like in 2018, at the beginning of 2020, it was obviously the beginning of a much deeper decline. Having said that, I have to make a note when we're at euphoric levels that line up with previous market tops. Having said that, our next chart is looking at bullish and bearish sentiment. We talked about this in yesterday's show, so if you missed it, you can go back there for a little further conversation. But basically, we had not seen a level of bullishness from the AAII survey in a long time, and I think that was one thing that made this uptrend feel relatively reasonable, was you didn't have the extremes in bullishness. That all changed this week when you had a huge increase in bulls from just under 40% to just over 55%. That's a huge jump, one of the biggest jumps that I've seen in following this for over a decade. And the last time we had that was back in 2018. Now, I did post this on social media, and I will tell you what I heard back, which is one of the really fun parts about putting charts on social media. You get instant feedback and plenty of pushback on things. The comment was there are other times where you've had extreme bullish readings in this in the survey, and that's totally fair. So if you look at other times have been this high, 2018 is here. You could also argue we're more here, which is late 2014, which is before we again eventually it wasn't far from the top, but we certainly went higher for another 6 months before we had a meaningful decline. So again, that's why sentiment for me is not a timing tool. It's a sentimental tool, right? It's an indication. It's an anecdotal indication of where people's heads are at. For me, I will always look at the price as the primary decision point and make some comparisons that way. Boy, that's all the time we have for the wrap the week segment. So many other things, and I'd encourage you, this Mindful Investor Live chart list that we're using, you can get to that from my blog page. So go to the articles section up here, go to the Mindful Investor. You see a link at the very top. I'd encourage you to review those, take that list and adjust it and incorporate that into some part of your weekly routine. I think you'll find you're able to keep on top of the key trends much more easily.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.